Hey everyone, welcome back to another dividend investing video. We are looking for solid, long-term dividend growth investments here. And one dividend growth stock that is making a lot of noise as we come into 2025 is Nike, ticker NKE. And for good reason. There are several reasons you might be looking at investing in Nike. We're talking about a globally recognized brand and one of the largest players in the sportswear and athletic footwear industry. It is a massive loyal customer base and a significant competitive advantage in terms of branding, partnerships, and innovation. And this alone is enough to get an investor's attention. These products appeal to athletes and casual consumers alike, and their iconic swoosh logo and the Just Do It slogan are instantly recognizable anywhere in the world. But is Nike stock something that dividend investors should consider adding to their portfolio right now? Well, I hope that this video helps you come to your own answer for this question. Now, I'm Nick. Welcome to the Dividend Growth Income channel. Thank you for joining me today. Just to let you know, I'm only a regular guy who's just interested in dividend growth investing, and I'm just here sharing my experience and personal knowledge. I'm not a financial advisor or guru, and investing, as always, does carry some risk, so please be responsible. So another reason a lot of folks are looking at Nike is the turnaround play. This could be a chance to acquire a quality, iconic business at a discount. The stock has had an awful 2024. Shares plummeted almost 30%. And that's rough if you are a shareholder holding through a drop like that. And likely many sold out of their positions as it dropped. On about June 27th, the stock fell huge, went from $94 down to $75. It dropped like 20% just in one day there. And then over the rest of the year, it started to climb back up. It flirted with $90 again, and now it's back down to $75, $76. Look, and 5 years ago, if you had invested in Nike today and you held all that time, you would be down 25.31%. Mind you, Nike stock peaked in 2021 at over $170. It's almost $100 more than it is today in 2025. It's pretty crazy. And Nike has historically had strong revenue, profit margins. They keep a healthy balance sheet. So what's gone on? One major problem is despite generations of being the top dog in athletic apparel, the competition has taken too great of a market share, being a threat to Nike's moat. Now, in the fashion world, consumer preferences shift rather quickly, and it's difficult to build a lasting brand. So this company is always going to be under threat from rivals. 15 years ago, it was Under Armour, who had a solid decade, and then they just took a massive dive. And today, it's upstart competitors like Hoka and On Running that have grown in popularity and cut into Nike's market share. So I came across an article on Seeking Alpha I thought was worth taking a look at here. It's titled, "Just Do It Again? Will Nike Keep Its Lead in 2025 or Trip on the Track?" This is by Amy Thelian on Seeking Alpha. I hope I'm pronouncing her name correctly. I'll put a link to the article into the description. After a lackluster year that saw competitors steal market share, innovation dry up, and its share price drop from 30% from a year ago, Nike is embarking on an ambitious turnaround plan for 2025 that new CEO Elliott Hill hopes will restore the brand to its former glory. Now, Elliott Hill was the CEO of Nike for 32 years, so he knows his job. He retired back in 2020 when they brought him back last September. And look, he does have his work cut out for him. Hill must address a number of missteps over the years, not least of which is complaints over a lack of innovation and a strategic pivot towards DTC, that is direct-to-customer model, that enabled competitors to encroach on Nike's vaulted position. Hill also pointed to Nike's promotional pricing strategy for tarnishing the brand and resolved to clear outdated and aged inventory to refocus on premium pricing. So they know they have a problem with innovation, and they point to fiscal 2026 here. So 2025 looks to be a long year for Nike, potentially its investors as well, as they continue to liquidate bad inventory and begin to execute on Elliott Hill's plans for the company. Now, if they pull it off, we have what looks like a solid long-term investment here. This could be a great time to get in. So at the very least, I do think this belongs on any dividend investor's watch list for 2025, at least. Now, the Wall Street analysts rate the stock a buy with a score of 3.81 out of 5. Out of 38 analysts, 15 call it a strong buy, 4 a buy, 17 a hold, 1 a sell, and 1 a strong sell. The average analyst price target at this time is $86.48, and this represents 14% upside from today's price. I would find it more likely than not that Nike's stock price recovers from where it is today. And regardless of the current issues facing Nike, the company has demonstrated resilience during tough times in the past, and perhaps they deserve the benefit of the doubt today. Dividend growth investors have another reason to consider a long-term investment in Nike, and I would call this stock a dividend growth powerhouse. The 5-year average annual dividend growth rate is 11%, and its latest raise just back in November was at 8.1%. That's 22 years of dividend growth and 40 years of uninterrupted payments without a reduction. And just think of all the world-shifting events that have occurred in the last 40 years, yet Nike keeps on chugging along, paying that dividend and raising it. They're almost 3 years, they're going to be a dividend king if this were to continue. And despite the tumultuous year that Nike had in 2024, and the outlook for 2025 doesn't look to be all that much better, let's be real, the dividend itself does look to be secure. Simply Safe Dividends reaffirmed their 99, quote-unquote, very safe dividend safety score on October 16th, 2024. Now look at the payout ratios. The next 12 months, we're going to see an earnings payout ratio of 86%. It's abnormally high, and given their track record, I'm okay calling this an outlier. We want to see this below 60% ideally in terms of earnings. But more importantly is, how is this dividend covered by free cash flow? Right now, it's pushing that limit of where we want to see it at 62%. And I see 2020 as a freak outlier in any graph given, so I'm not really looking at that one. But hard to believe that was 5 years ago, right? Where did time go? But the question dividend investors must ask is, can we get these ratios back to that 30 to 40% range when they were continuing to raise that dividend at double-digit rates? With that extra free cash flow, that's how they could do things like that, and they could also buy back shares. Nike is not historically what you think of as a dividend stock, though, right? Its average annual dividend yield over the last 5 years is just 1%. But the fact that today it's at 2%, I think, should get the attention of dividend-minded investors, and it makes sense why the stock is so popular right now. And if we look at it from this pure dividend yield theory perspective, the stock looks very undervalued. At its historical dividend yield of 1% today, Nike would be trading in the $131 to $160 range. But don't get too excited. On the flip side of that, the stock looks quite overvalued by its PE. Today, the stock trades at a forward PE of 40.9%. And this just recently shot up due to the huge drop in earnings Nike saw and is projected going forward. The average PE over the last 5 years is 31.9. So even for a premium brand like Nike, which we do expect to trade at a premium, stock is priced expensive. And if it fell in line with its historical average PE, it would be trading between $53 and $65. And crazier things have happened than seeing Nike stock in the 60s. Look, the 52-week low right now is $71, so it can happen. And I think that's when the opportunity here with Nike would become too big for myself to ignore. Because I don't own the stock. I'm interested in the stock. I think it's compelling right now. There's long-term money to be made in the stock, I believe. And in 2025, it looks like a good year to get into Nike stock from a dividend growth investor's perspective. Now, I'm not necessarily pulling the trigger just yet, though, because if you know my portfolio, you know I'm already in so many stocks. Financially, Nike's in a solid position. They do a great job growing their revenues year over year. Back in 2015, they did $30.6 billion, and in 2024, they brought in $51.9 billion. I love seeing that steady, incremental growth like that. That's exactly what you want to see. They also incrementally take shares off the market. Shares outstanding have dropped from 1.77 billion to 1.51 billion in the last decade. And remember, when outstanding shares go down, your stake in the company increases. Now, a 35% return on equity and a 21% return on invested capital, this is a well-managed company and has been effective generating returns on its investments. And this is critical for long-term growth and creating value for us as the shareholders. And Nike, it's above average in these departments. And they have very little debt to boot, with a net debt to EBITDA of 0.46 and a net debt to capital of 14%. Both of these metrics are considered extremely low. In addition, Nike has reported cash and equivalents of almost $8 billion for its last quarter ending in November 30th. So the company's issues are deeper than these solid financials, and there are legitimate, real issues that Nike's going to have to overcome to retain its place as the world's #1 leader in apparel. They do have their main guy in Elliott Hill back, and so if anyone is poised to do it, I think they got their man. We can say that at least. Now let me know down in the comments if you're an investor in Nike. Are you going to be buying in 2025? Do you think I should be buying it in our dividend growth income portfolio? I am considering it, but like I said, I think it would have to drop a little more for me to go pull that trigger. There is much to consider. Lots going on. We'll talk about this more throughout the year as Nike and other blue chip stocks evolve. Go ahead and click into this next video where I give a complete breakdown of a dividend account I've been building for 2 years. This is the dividend growth income portfolio. Thank you so much for sticking around. And until next time, keep investing.